Hello everyone, welcome back to Learning Hub Commerce by Monica, your one-step guide for mastering accounting in a fun and simple way. So today we are diving into the topic which is the secret sauce behind keeping your accounts balanced. Guess what? Yes, it's the golden rules of accounting. By the end of this video, you'll exactly know how to classify any transactions. Let's go. So before going to know about the golden rules of accounting, you need to understand the three main accounts, three main types of accounts. What are they? So the three types of accounts are: first one, personal account; second is real account; and the third is nominal account. So what does this personal account deals with? It deals with individuals, firms, and companies. Okay, and the real account deals with tangible and intangible assets. And then nominal account deals with expenses, incomes, profits, and losses. In accounting, every transaction involves one or more of these three types of accounts. So now we'll move on to the golden rules of accounting and we'll see how it works. So here's the rule for personal account. Okay, debit, the receiver; credit, the giver. Next, the rule for real account. Again, debit, what comes in; credit, what goes out. Finally, the rule for nominal account: debit, all expenses and losses; credit, all incomes and gains. Now we'll see the rules with examples. Okay, so as we have discussed, personal account deals with an individual. Let us take an example here. A lends rupees 500 to B. So these two are individuals. So here, who is the giver? A is the giver. Who is the receiver? B is the receiver. So now A is the giver, B is the receiver. So what we need to do is, A is the giver, we need to credit the A. And as B is the receiver, we need to debit the B. Simple, right? Then we'll move on to the real account example. So as we have discussed, real account deals with the tangible and intangible asset. We'll take an example here. If you buy a laptop by paying cash, so here, as a laptop is an asset, okay, you are buying a laptop by paying cash. So now the laptop is debited as it is coming in. You are purchasing and it is coming in. So what comes in, you will debit. And cash is credited as it is going out. So laptop is debited, cash is credited. Understood? Now, finally, we'll move on to nominal account. So here we'll take an example. If you pay rent, okay, if you as rent, you are paying rent and paying rent is an expense, you will debit the rent. You will debit the rent. Okay, and cash account is credited as cash is going out as per the real account. Now we'll just sum up again the golden rules of accounting. Here, personal account, real account, nominal account. The rule for personal account is debit the receiver, credit the giver. Real account, debit what comes in, credit what goes out. And nominal account, debit all expenses, credit all incomes and gains. If you found this explanation helpful, don't forget to subscribe Learning Hub Commerce by Monica. Hit bell icon so that you will never miss any upcoming topics. Stay tuned. Happy learning.